Hello traders, I'm Michael Sabo, Senior Commodities Broker with RJO Futures here in Chicago. Bringing you some commentary here in the energy markets and what exciting things that are going on here right now. A lot of volatility in this market. Looking at crude prices here right now this Wednesday, August 28th, we've got a bit of a firmer tone here on the overnight. Crude prices were really running. Currently we're trading around 109.85. We're up about 84 cents here roughly. But we went here on the overnight, we went to a high of over 112 a barrel. The market came back down and we're trading here just around yesterday's highs in the markets, which saw a pretty impressive move there yesterday. Put this in perspective, over the last 5 days, crude prices have rallied from the lows to the highs about $8.50. So certainly seeing a lot of premium being built into this market. Brent also firmer here. We're trading right now around 115.58. That's up about $1.22. And you know, I mentioned in a lot of these prior posts here about that WTI Brent spread, and we're really starting to see that thing widen out. We got down near parity, and since that time, this market's really started to really seen this thing starting to widen here now. So there's been some great opportunities there. Give me a call, shoot me an email if you want to learn a little bit more about that. The nat gas a little bit weaker here right now. We're off about 4 to 5 cents, trading around 352.5 area. And then taking a look at the complex, of course, we're seeing a firmer tone there with the RBOB and heat both firmer. RBOB's currently up right now, a little over 3 cents right now. So we are seeing firmer tone in the complex. Obviously, that's just spilling over here from the crude market. And one of the big things is, you know, if you turn on any news station right now, we know a lot of what's moving this market here is this fear premium that's being built in with this real threat and I think possible military action that we're going to see happen here in Syria. Now, I think we need to put this in perspective here. The administration, we've seen a lot of news broadcasts coming out of there. They've made it pretty clear that some action is probably going to be taken, but something that they've really done a little bit different is that they're already identifying targets. They're pretty much putting it all out there. Hey, this is what we're looking at doing, and I think what you're going to see is you're going to see a very surgical approach to this, where there will be some rocket strikes to key military installations, and basically just letting them know that the use of chemical weapons won't be tolerated. But I don't think that it's going to be anything beyond that. In other words, I don't think you're going to see ground troops going in and things of that nature. And I think this is important to put in perspective here, because I think there's a ton of opportunity in this market right now. Now, if we look at what took place here back when they did a lot of surgical airstrikes and created a no-fly zone in Libya. And you got to put this in perspective. Syria, while there is a little bit of oil that does flow out of that country, in relationship to Libya, Libya has Africa's largest proven oil reserves. They export almost 20 times more oil out of Libya than they do out of Syria. So I'm not trying to downplay the entire oil production coming out of Syria, but to really put it in perspective, it's pretty minuscule. The biggest threat there is if it draws in other countries in that region, such as Iran and things like that, and I really don't think that that's going to happen right now. So I think that there's a lot of fear premium that's being built into this market, and I don't think it's really going to translate into any shortage of oil. And if it does, it's going to be more on the Brent side, obviously, and that's why we're kind of seeing that spread widen out. So I think there could be some real opportunity to look at the short side of this market, possibly be a contrarian in there, but you've got to be very cautious. Crude prices do have the potential here to spike, as we've seen here over the last several sessions, and there could be further upside possibly in store. So anyways, I've got some ideas on how you can take advantage of that, and risk management here with these strategies is going to be paramount. So give me a call, shoot me an email, we can get into more detail on that. I do want to touch on the EIA numbers that we saw come out. We saw a build here this week, about 3 million barrels. The traders are looking for about a 500,000 barrel build, and they came in with around 3 million barrels. And this kind of plays into what I was saying earlier. Look at the stockpiles of oil. Current stockpiles of oil right now are about 362 million barrels. So there is a lot of oil, in my opinion, out there on the market right now. If you take a look at how that put everything into comparison here, our 5-year average here right now is about 346 million barrels here. So we've got 16 million barrels right now in current stocks than we do over the last 5-year average. And if you take a look at the highs for this time of year, which we have to go all the way back to 1990, came in at about 381 million. So we're not too far off the highs, looking at the lows, which was in 2003, was about 278 million barrels. So we've got 84 million barrels more in our current stockpiles than we did at the lowest time for this year back in 2003. So I think when you really look at it in perspective, again, I think there's ample oil right now out on the market. And then start factoring in, look at our weak equities market that we've seen, which is partly a function of what's going on in Syria, as you're seeing a little bit of money coming off the table, I think, but also look at what's been going on in the Asian markets. We're seeing some real weakness across the board there, and I think we're starting to see a little bit of a slowdown here. So in other words, the demand side of the equation is a very big question mark, and supply side does appear to be ample right now. You minus out this conflict that we got going on in Syria, and I think it could translate into lower prices. But again, a lot of opportunities here, whether you're a bull or a bear. Give me a call, shoot me an email. I'll be more than happy to help you out. And of course, remember that futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck and good trading.